All right, Ripple XRP holders. So we have to talk about a XRP price prediction by Wells Fargo and how that relates to the adoption of XRP, Ripple as a company overseas, what's happening with OPEC, what's happening with the BRICS nations, how this all connects in a bigger picture. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish, and if you're wondering how to become the first millionaire in your family tree, confirm it right now by tapping that subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So Shannon Thorpe, who's an expert from Wells Fargo, has made a unique forecast and a very shocking price prediction for XRP. She believes that if the market for XRP becomes significantly and sufficiently liquid, meaning that it has enough trading activity back and forth, its price could range from $100 to $500 in the next 4 to 7 months, which is absolutely insane and it's shocking. But I'm not here to say that XRP is going to go to $100 or $500 or $1,000 because it's not financial advice, but I do want to share the facts with you. And I want to talk about what this would result in, because this would be a massive 14,000% to 71,000% growth based on the current price of XRP. And so Thorpe is pointing out that current prediction models for XRP, they're flawed because they don't consider external economic factors that could drive the wider adoption of XRP and impact its price, which we're going to talk about in this video. So you're going to love this one. So when you compare XRP to SWIFT, which is an international settlement system that's used all across the globe to illustrate its potential, if Ripple, which is the company behind XRP, were to capture just 30% of the SWIFT's daily transactions, then XRP's daily use would reach 2.1 trillion. Now, I know that's a big if. However, there could be challenges with liquidity if banks held a large number of XRP tokens worth just, let's say, $1 each, as it would cause a strain on the ability to handle large transactions for customers. So the price of XRP would have to be significantly higher, for banks to adopt XRP for the use of cross-border payments. And to arrive at our XRP forecast, Thorpe considered various factors such as global banks' holdings, assets in crypto exchanges, burnt XRP, which is permanently removed from circulation, and tokens given to banks, developers, and individual investors. And so she estimates that between 50 to 75 billion XRP tokens might be available for liquidity. And if 300 to 1,000 banks hold XRP, each bank would need around 75 million XRP tokens. And there's tens of thousands of banks all around the world. So that's only 300 to 1,000 of them. However, this allocation would not be sufficient to handle even just 10% of the daily transactions of a bank like JP Morgan Chase, which processes $8 trillion daily, not considering other assets like real estate and derivatives. And Chase Bank is just one bank. So think about that. So if Thorpe's predictions comes true and XRP's price rises to $100 to $500 in the next few months, the liquidity strength of XRP could increase to between $5 trillion and $25 trillion, assuming a minimum token supply of 50 billion currently. So this would create enough room for the market to grow and prevent a single entity from holding an excessive number of XRP tokens. And as the adoption of Ripple and XRP increases in the banking and financial sectors, the burn rate of XRP per day will accelerate as well too. Now, this means that more transactions on the network, a small amount of XRP, which is about 0.00001 XRP, is burned or permanently removed from the total supply, which might seem like a small number, but as time goes on and more transactions occur on the network, the rate of XRP depletion will increase. And based on supply and demand, when more XRP is burned, there's less supply. So when the supply decreases and the demand increases, that creates a price shock. What would happen to the price? Well, it'd start to look like a massive hockey stick. And banking partners and partnerships with Ripple, as well as collaborations with companies like Walmart, MoneyGram, and Western Union, will lead to more extensive use of XRP as a bridge asset, offering liquidity and cost savings over other methods. Because the cost for a bank to send, let's say, $1,000 wire transfer can range anywhere from a few dollars to $50 because of the cost involved with various fees charged by both the sending and the receiving banks, as well as intermediary banks in the transaction. So if we slow down here for a second and we look at this, let's think about this from the banks that have to pay an outgoing wire transfer fee, a SWIFT messaging fee, an intermediary bank fee, and an incoming wire transfer fee charged by the receiving bank. Not only do the banks have to pay for all of that, but the costs of that get passed on to the consumer, which is you and me, to pay roughly a $15 to $50 wire transfer fee, and it still takes 1 to 5 business days. So imagine if someone initiated a transfer on Friday, sending to you, you might have to wait all the way until Thursday or Friday of the week, to get your money. So imagine when banks want to transfer not hundreds, not thousands, not even hundreds of thousands of dollars, but millions or even billions of dollars, as Dr. Evil would say, quickly with low fees. Well, what are they going to do for that? Think about it. The total cost for a bank to wire transfer just $1 million ranges from a few $100 to several $1,000s, whereas with XRP, it's pennies. So imagine how many banks would do this knowing that they could still charge the customer a $10 wire transfer fee, which is $15 less than what most banks charge at a $25 fee for customers that don't have or they don't know anything about crypto to bank themselves. And the banks could virtually have a 99.9% profit margin to facilitate the transfer because, they wouldn't have to pay the wire transfer fee, the Swift message fee, the intermediary bank fees, essentially getting rid of the middleman. And that's what's happening. So the banks will see dollar signs stacking up in their eyes long term, and it's going to be a rush to which bank can accumulate the most XRP in reserve. So additionally, as more people learn about XRP and buy it on exchanges, the transaction volumes will further rise in theory, but the operation of SBI Holdings trading desk in Japan is expected to continue significantly to this growth and attribute to it in the future. And most people are wondering with the current daily burn rate of XRP, it can be tracked right now on websites like one's maintained by Ripple and Turf Pool, and the burn rate fluctuates throughout the day, but the average daily burn rate is currently around about 5,000 XRP. And this means that approximately about 1,825,000 XRP would be burned in a year at the current rate. However, it's expected that the burn rate will increase over time as XRP adoption expands. So when XRP is burned, it is permanently taken out of circulation, leading to a decrease in total supply. And this decrease in supply is considered a factor that may contribute to future price increase of XRP, just based on simple economics, supply and demand. And some experts believe that the daily burn rate may eventually reach around 25,000 XRP per day in the future. And so banks not only will be scrambling to accumulate as much as possible, but to hold it as a reserve for their transfers through the XRP ledger. So a big question that I've been getting a lot is if banks are partnering with Ripple and would need XRP to make low-cost cross-border transfers and XRP's price would need to be higher, well, why is the price of XRP at the time of making this video falling? Now, depending on the time that you see this on YouTube, that's why it's important to subscribe to the channel. Go to bullrunners.com to make sure you're subscribed to our video newsletter so you get these videos right away, because you might be watching this a week later and XRP's price might be going up. We don't know because the price always changes, right? The price either goes down, consolidates sideways, or it goes up. And so in this case, right now, the price of XRP is falling. So what's happening? Well, the price of XRP, it's not always immediately reflecting on the chart with the potential impact of banking partnerships or the adoption of XRP by financial institutions. This is because the cryptocurrency market, it's highly speculative still and influenced by a ton of factors, including market sentiment, which is the overall attitude and feeling of traders and investors towards certain assets, especially risk-on assets like cryptocurrencies. And so the Crypto Fear and Greed Index is a neutral right now, meaning it's right in the middle. So the market sentiment is neither super bullish or super bearish. And we've already seen a 100% price rally for Bitcoin, the leader of the market since November of 2022. So tons of retail and institutional investors are cautious right now. They're not putting in lots of money, except the smart ones are. And a big chunk of them that are sitting on the sidelines are going to miss out. And macroeconomic conditions are another reason why XRP hasn't taken off yet, with talks of a economic recession, geopolitical tensions, and also the student loan debt forgiveness program is ending September 1st. So everyone that has been putting off their student loan payments and spending all that money, to stimulate the economy, or they're putting it into, crypto, they're putting it into the markets, would have to start putting that money back towards their loans rather than risk on assets, which would create a contraction in spending, further leading to more recession fear. So that's affecting the market sentiment even further. And also regulatory developments and overall cryptocurrency market trends as well is what's holding back XRP because of the SEC's attack on Coinbase and Binance. Now, I know what you're thinking right now. Well, Ripple won the lawsuit. XRP is not not a security. So why would the SEC's attack on Coinbase and Binance affect XRP, after they lost the lawsuit with Ripple? Well, what would cause there? Well, what's happening there is they're purposefully trying to slow down the growth rate in the adoption of crypto across the entire globe, because if crypto goes global, which is happening right now through blockchain technology, it drastically decreases the power of US dollars and the government's ability to sanction countries. Now, this is all connected because the fall of the dollar is leading to the rise of crypto, since they are inversely correlated, meaning that, if the dollar value of the dollar goes up, then risk on assets, crypto goes down. Well, if crypto goes up, the dollar's going down because liquidity is flowing out of one sector into another. And this is important to know because in the early 1970s, the dollar became known as the petrodollar for international oil transactions. And this started after key events in the global oil market and finance. And so one of those key events is after World War II, many currencies were tied to the US dollar through the Bretton Woods Agreement, where the US dollar was backed by gold. But in 1971, President Nixon removed the gold backing, ending the Bretton Woods system. So they needed to back the dollar by something else. And during the 1970s, OPEC, which stands for Organization of the Petroleum Exporting Countries, imposed an oil embargo, causing oil prices to rise and leading to higher demand for US dollar to buy oil, because oil was predominantly priced and traded in US dollars, and countries needed US dollars to purchase oil in the international market. And so what happened there was the price of crude oil went from about $24 a barrel in 1973 to over $147 by 1980, just 7 years later. So oil exporting countries then invested some of their US dollars into US assets like treasury bonds, creating what's called petrodollar recycling, and the US dollar's role in oil trade strengthened its position as the global reserve currency, since they were no longer backed by gold, and influenced international trade and finance because they could sanction any country they wanted that needed oil. And I had to do those deals in the US dollar. So it's very interesting how in March of 2003, when the US troops, went to Iraq, well, the price of oil went to from $50 a barrel to over $195 per barrel. So I'm not saying that was the reason for going over there, because what the mainstream media wants you to believe, listen to everything that they say, obey them, follow their commands, follow their orders. They're right every single step of the way. But very interesting how that happened, right? Because that's just the facts of what happened to the price of oil during that time when the dollar was taken off the gold standard. So what would happen to the crypto market? I'm asking this question right now. I'm curious on your thoughts in the comments below. What would happen to the crypto market when these countries don't need the dollar anymore to trade? Well, US dollars, would they come flooding back onto the shores, causing massive inflationary pressures? Could it diminish the US dollar's role as the dominant reserve currency, leading to a reduced demand for the dollar in global markets? And since September of 2022, well, the dollar's been dropping, the DXY, in comparison to other countries. And so with, the BRICS nations, which Brazil, Russia, India, China, and South Africa, and now Saudi Arabia, brokering deals with the Chinese yuan for petroleum and oil, the US is losing power. So could the SEC be attacking crypto? I'm curious on your thoughts here. Leave them below and like this video whether you agree. If you disagree, let me know in the comments. Could the SEC be attacking crypto to slow down the adoption of something like XRP? Was that why Ripple was targeted first out of all of the cryptocurrencies? Because it's the most powerful to facilitate a new world order, to connect the world globally. And so I'm curious. Either way, we're backing up our truck all the way to the bank, grabbing the bags, packing them and stacking them, leaving no bags left behind, because the spending power of the dollar is going down in value. That's a fact based on inflation, based on what's happening and what I shared with you in this video. Blockchain technology, distributed ledger technology, cryptocurrencies, together, we're going camping on the beaches of the moon. I will see you on the next video. I will see you on bullrunners.com. As always, you know what to do. Stay bullish.